All right. I see that. Perfect. Okay. Well, welcome back, everyone. Here we have Brett. Hey, Brett. How are you?
Awesome. Great to be here.
Great to have you. So, Brett, let's just kick this off by you telling us a little bit about yourself and your work at Coinbase.
Sure. So I've been at Coinbase now a little over a year. It's been an amazing year for sure. At Coinbase, my responsibilities are to run the institutional business, which is everything non-consumer. So that stretches across sales, trading, custody, and prime. And I joined Coinbase after a 25-year career in investment banking. I spent the last 17 years at Barclays, working both in London and New York. And I started my career at JP Morgan, where I was there for 9 years. And so I spent my 25 years in investment banking taking new asset classes to institutional customers. And I'm doing the very same thing here at Coinbase, albeit with a really different and exciting asset class.
Amazing. It's great parkour. Yeah, really looking forward to the conversation. And so maybe we can start off by you giving us a little bit of an overview of the institutional market today. I mean, what's happening? How big is adoption? And how deep do you believe it's going to go?
Yeah, so there's a bunch of, I think, statistics which are helpful to share with. And as of March 31st, the public stats on who we have and who's playing. On the retail side, we have 56 million verified users. With respect to assets on platform, it's $250 billion, which is quite a lot. So even with the volatility of sort of Bitcoin and crypto these past few days, it's a very considerable amount of assets on platform. Roughly half of that, or 122 billion, links to institutional assets under custody. We've got about 50 assets that you can buy and sell on the exchange itself, and we custody about double that, so about 100 assets. More specifically, with the number of institutional clients, we have 8,000 institutional clients, and the number is climbing by the week. We've got a long and building queue. So that's just a little bit on the stats. With respect to, another way to sort of answer the question is sort of who, right? Who's in the space? And so just rattle through a couple names, but I'm sure the audience has familiarized themselves with MSTR, One River, Tudor, Mass Mutual, Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, Guggenheim, SoFi, Grayscale, Cash App, Robinhood, eToro, Revolut. So these are very, very large institutions in most cases. And so what's different about institutional adoption relative to the 25 years that I spent in investment banking, bringing new asset classes, is adoption normally starts with fringe players and specialists, and it takes many years to sort of work its way up the ecosystem until the biggest players adopt it. And what's really exciting and different about crypto is that we sort of skipped a few generations and we skipped a few years. And so what's happened is because of the boom in market cap, principally, and because of the liquidity and the depth of liquidity, the persistence of liquidity, and because of the infrastructure that's there, what's happened is the largest institutions are now actually able to deploy a very significant amount of capital. And so I attribute sort of the explosive growth as a function of really two things. Firstly, the infrastructure. So can you trade it in a similar way to the way that you trade and own FX or equities? Can you do that safely? Can you do that as a regulated institution? And the answer to all that is yes. And then, is it big enough to warrant my attention? And so, no better sort of macroeconomic backdrop, both in Europe or globally or abroad, than the one we've got now, with the printing press going nonstop, the threat of inflation. And so even with, I think, Bitcoin's most recent sort of volatile price performance, I do think that Bitcoin as a long-term store of value is definitely a focus.
Okay, thank you for that. You mentioned quite a few elements there, and if we break it down a little bit, what do you believe are your biggest concerns for institutions today?
Well, it's an interesting question to answer because when I was still in what Coinbase likes to refer to as Finance 1.0, or the traditional investment banking world, I actually flirted with the idea of opening a OTC crypto desk. and that was back in 2018. And my assessment at the time was that it was super interesting, but I didn't think the infrastructure was there to support the activity. And so really, any regulated institution, any institution that deals with other people's money has to ensure the fact that they're doing things in a responsible way, right? So I think it begins with the infrastructure. So if I talk a little bit more about that part, what I'll say is we're a prime broker, and so really one of the best compliments I had from a very, very large macro hedge fund is, Brett, it feels like you've built the same experience that we have when we're trading FX or equities, right? And that was an enormous compliment. So what we intend to be is a full stop, so a full solution. So we'd love to have Coinbase Institutional be the singular on-ramp to access the whole crypto world, right? And so that begins with having a prime broker, so think a trading account, and then having a separate bankruptcy remote custodial account. So if I focus on the trading account for a second, like how does it work and what tools are there? So the most important thing is being able to have smart order routing, so doing liquidity aggregation across lots of venues. So no institution really wants to be beholden to buying at one place at someone else's price, right? So what they really want to do is to say to their board, their investors, their stakeholders that they're sure that they got the best price. And so the way that we accomplish that is by aggregating liquidity across 12 different venues that we deem to be safe places to operate. And we can buy and sell in fractional amounts of any cryptocurrency. And so we disguise ourselves in the market even when we're doing multi-billion trades, right? And so no one can detect the fact that we're at in the marketplace with a pretty large buying program or selling program, right? Our best-in-class trading platform then gives you a post-trade report. So how do I know, right? And so you can actually see what the marketplace is trading. You can see where your fills are. You can assess the performance of the algorithm. So the infrastructure that allows you the ability to have agency only, so I don't make prices, right? I just act on behalf of, I'm instructed by clients who have asked to use our algos to buy or sell at the best price. So that's like a foundational element of understanding how to engage with crypto. Once you've bought it, then there's an integrated solution a seamless solution where you send it across the blockchain into a custodial address, which is yours, right? And the default there is that we can't touch your crypto, we can't engage with it, it's yours. It's kept safely. We've abstracted away sort of the nuances with key management. We've put in place certain protocols that allow you to have the best in class security, so that requires things like consensus, and there's quite a lot in the feature set that makes institutions comfortable with buying at the best price, sending across the blockchain into a custodial account where their crypto is kept safely. And so you keep just layering on and on more and more features on top of that. So for example, for our largest and most active clients, we have at one shop, we have as many as 13 different traders trading, I think 4 or 5 different trading books. So different pools of capital, all at the same firm, actively trading 24/7. And when they do that, they want the ability to instantaneously trade. So you'll know that from your own experience that there's a delay sometimes between taking assets that are in cold storage and bringing them into the hot wallet, right? And so what we do is we actually use our own balance sheet. And so we facilitate these intraday loans to enable large clients to be able to buy and sell at a moment's notice, right? And so if you bring together the sort of the nuances and the specificities of crypto, and you include it with, you pair that with tools that you know and love and are familiar with, trading on algos, then you have a recipe for institutional adoption, which works. All right. And so again, keep layering on and on and on. What we'll add over time is the ability to trade futures and have cross-product margining. I don't want to go too technical in the conversation, but clearly infrastructure, I think, was the concern, was the gating factor. Now that has largely been solved for, and we've proven that, we've won countless mandates in competition with others, and clients vote with their feet. And so we just a stat for you. When I joined Coinbase, we had just shy of $5 billion in assets in custody. And if you remember at the beginning, I said we now have $122 billion on platform. So it's been a great endorsement of clients, and I think they wouldn't have done that without the ability to be comfortable with the infrastructure.
Well, that's extremely insightful. Thanks so much for providing all that, and really exciting to hear all the stuff that is coming as well. And before we move on to kind of more of, let's say, the topic of our conversation, which is the security token side, I just wanted to tell the audience, don't hesitate to put any of your questions in the chat, of course, with kind of, let's say, within the boundaries of this topic and conversation. Please ask them, and I'm sure Brett will happily answer some of your questions towards the end of this conversation. So yeah, if we move into more like on the security token side, maybe a little bit about the infrastructure. I mean, what are your thoughts about the infrastructure today? Is there anything that's lacking? Is there anything that's impending, let's say, impeding institutional adoption? What are your thoughts?
Well, I think if you have, it begins with my personal theory on when we're going to pivot into the conversation on tokenization. I think tokenization is I think a precursor to enabling broad adoption of tokenization is to have an institutional universe which is already activated in their ability to buy, sell, store, potentially stake crypto, right? It's really hard to say, here you've been deploying assets, your capital into physical and financial assets in sort of old world ways. And in one shot, you're going to pivot that into owning something that's been tokenized that uses crypto rails. I think that's a really sort of tall ask. And so I think Coinbase, by virtue of inviting institutions of all types to familiarize themselves with the ability to buy, sell, store, stake crypto, I think that's a precondition to then layering on a new application, which is a tokenized physical or financial asset, right? And so that's one remark. The second would be, and I don't want to talk too much about this part of it, but you do need I think a friendly regulatory backdrop. So my again, personal expectation will be is different types of crypto will be regulated differently, either as commodities or securities or other, right? And so in anticipation of having multiple regulators across the world with different regimes based on the specific attributes of either a tokenized asset or perhaps Bitcoin and Ethereum, which currently is characterized as a commodity, I think institutional investors will want to have a bit of clarity around that fact. So that won't stop, however, innovation. So we've already seen tokenized assets beginning to come into full effect. We custody some already, and now we need to again develop out the ecosystem, right? So if you can tokenize something, great. You're going to have to actually go through an analysis, however, on how do I perfect my rights, under what legal regime, if things go wrong, can I assert my rights of ownership or otherwise, which aren't trivial when you layer on the fact that now something's digital, right? So you do need to, I think, link that up with. I don't think you can solve everything with protocols. Just practically speaking, particularly if it's a physical asset that sits in New York or Geneva or wherever, right? So you're gonna need clarity on what it means to own it and how do I perfect my rights. That's to it. And then the third bit, which hasn't really come fully into form, is the marketplace, right? And so now if we have a plethora of tokenized assets, what are they deemed to be from a regulatory standpoint into the security? And if so, what venue do I go to buy or sell it, right? And so I think there's a lot that's happening on sort of multiple paths simultaneously to help give rise to tokenization.
Great. Well, thank you. Thanks for that. And if we keep on that point, and maybe one in particular around stablecoins, I mean, do you believe that if we have a fast adoption of regulated stablecoins, that it'll alleviate some of these infrastructure issues, or might it create bigger issues instead?
Well, again, stablecoins, we're just at the beginning. Like USDC, which we're very close to and supportive of, is growing, right? By virtue of its market cap, if you like. But the utility value of stablecoins for either international cross-border payments or using crypto rails as something to lower costs generally for hyperactive institutions that have lots of micropayments or otherwise is just coming into form. And so my expectation is going to be that, if someone wants to participate in tokenized assets, the likelihood is you're going to wind up using a stablecoin, I think, to facilitate the purchase. So there is a growing swath of institutions that arrive on our doorstep, corporates of all types, right? They come in and say, hey, Brett, we want to consider Bitcoin as a long-term store of value in what could be this inflationary environment, and here's our CFO and a treasurer, and we think we may want to buy. But then there's this other use case, which is, hey, Brett, we want to position our firm to participate in the digital economy. We're not exactly sure what that means, right? So we think it means dealing in commerce. We think it could mean paying payroll. It could mean white labeling Coinbase's infrastructure to enable our end clients to be able to buy, sell, store crypto. It could mean a lot of different things. It could mean coming into possession of tokenized assets, right? And so there's a lot, I think, that has to be formulated and worked through to figure out where we're going to end up in the tokenized space. But I do think that stable coins, at least my thesis is, stable coins is an enabler and maybe a precursor to having more broad adoption of tokenized assets. And I think last point here would be, you're going to want to engage with a stablecoin that you've got a high degree of confidence that, there's in USDC's case, there really is $1 US sitting at a bank to back the issuance of one USDC, beyond a shadow of a doubt. And I think that sort of clarity, I think, is a necessity, because if you're going to do something different and wild and exciting, and you want to participate in a tokenized asset, if you're going to step through and take your fiat, put it into a stablecoin, you don't want to take basis risk, or you don't take risk in that part of the process, right? The place you want to take risk is in the thing that you bought, which is a tokenized asset. That's where you want to take risk, but you don't want to have a layering of risk, right? Going through and saying, well, if I put 100 of whatever into it, maybe it's actually only worth 90, and that would be a horrible place to start, right? So I think more fulsome adoption of stablecoins is certainly an enabler of growing the tokenized participation.
Yeah, thank you. I think we're fully aligned on that, and I think the audience is as well. I mean, and can you provide maybe with some perspective on how your custodial solutions are helping accredited investors to tackle this kind of security tokens? I mean, some examples would be like Red Swan or otherwise.
Yeah, so I'm not going to comment specifically on any one accredited investor. Suffice to say that we have thousands of them. And our custodial solution is rock solid. And so there's sort of two things that we're doing. One of them is, hey, we're new to this space, or we're hyperactive in the space, one or the other, and we need a custodial solution that's integrated with your trading platform, financing solutions, derivatives, and other things. So we've got that. So, and as our capabilities and feature set continues to expand from the prime, that integration with custody will stay very, very closely linked. The other thing that's happening is that banks, so global banks, private banks, all types of different banks, are asking Coinbase to consider acting as a sub-custodian for them. So large banks don't necessarily have the native crypto capabilities to be able to provide their end clients custodial services. And so there's an infrastructure play here for the banks that I think banks broadly have concluded that digital assets, tokenized assets, are in their destiny. With the scale and pace of institutional adoption that's happening today, I don't think they have the luxury of saying, oops, we sort of missed the first chapter. I think we'll catch up to it quite quickly, though, and we'll just grow our own native capabilities. It's possible they will do that, but clearly in this world with a pace of adoption, another alternative route is actually to say, maybe we should use someone like Coinbase to help provide this sub-custodial service, and maybe even also the transactional layer. When that happens, and it's the process of happening, it's really a really super important moment for tokenization. because banks as intermediaries between people who have excess capital and those that have, investable assets, they quite deliberately sit at the cross section, right? And so if that bank intermediary now has the ability to facilitate transactional activity in digital assets, tokenized assets, it's an enormous enabler, and I think it's a sort of an earthquake in a good way for the formation, the more fulsome formation of tokenized markets.
Well, no, it's incredible. Thanks for that. And I mean, I feel like we could continue for hours, but we are approaching the end here as well. I mean, don't hesitate to ask a few questions in the chat, folks. But we'll just go with one last one here, Brett. That was actually on my mind. I mean, does Coinbase Prime provide enterprise class portfolio management tools to address the lack of infrastructure amongst financial advisors class? I mean, what do
we have 50 introducing brokers. It's more now. Every time I cite a statistic at Coinbase, it's we've already sort of passed it by. But we're lesser well known for this, but it's a core focus. So you can come to us to participate directly, which is the buy, sell, store, stake, right? For your institution. The other thing you can do is do integrations with us. So two firms that we have integrations with that I'm allowed to talk about publicly are Revolut and SoFi. And so they can use Coinbase's crypto infrastructure to facilitate their end clients to be able to do that. And so actually there, it's a little bit more of a merger of the client experience that those institutions want for their end clients. And often the default is to say, well, we already have an interface, right? And this is what we use, and we actually want to. It's a little bit like powered by Coinbase, sort of behind the scenes. And so there's a lot of conversation that's going on between those institutions saying, hey, this is the front skin that we want, or this is the experience we want, and can we use your set of APIs and fixed connections that enable the activity of buy, sell, store, stake crypto.
Wonderful. Thank you so much. And we'll move quickly onto one of the questions here that's, I think, really interesting by Klaus, the CEO of DigiShares, who asked if you can comment a little bit on the DeFi ecosystem and whether Coinbase will embark on a similar journey as some other companies within the space. I mean, if you don't want to speak too much about, let's say, what Coinbase will do, but maybe just a comment on the DeFi ecosystem.
Yeah, sure. I think DeFi is amazing. I mean, it's a constant source of innovation. It's hyperactive. You can see what's going on in the space. Broadly, I would say institutions aren't ready to engage yet in the DeFi space. But my expectation will be through the passage of time. I've already seen institutional capital come in, invest in Bitcoin. Ethereum's a fast follow. Investing in other crypto is beginning to form as well. And whether those are viewed as venture bets or hedges to other things, or just generally positioning their firm to have long-term upside, some combination of those things. My guess will be that through the progression of time, they'll want to say, we want to participate in DeFi. We're not really sure which one is a safe one. What do you think? And so maybe it's possible that there's a facilitation of saying, we think these protocols are, interesting and safe places to operate. You will opt into taking incremental risk by doing that. So my expectation is someone that facilitates that can't own all the risk associated with that. The owner of the capital has to opt into the ability to transact with the DeFi world. But I see that forming fast. And so it's a little unclear to me in terms of how quickly that scales. But on that side, what I would posit would be that it's probably going to be some large hedge funds or specialist alternative asset managers, or indeed, absolutely, the crypto native hedge funds that we serve, who are more familiar with the evolution of technology and have a risk appetite to want to engage in those protocols. And I think that those combination of crypto native firms, plus actually you may be surprised by some of the larger hedge funds, I think, will make they might view it as a venture bet, a risky bet, but I think a combination of that capital will likely want to participate in DeFi. And then if those experiences are good ones, like everything else, I hope to see a fast follow by the rest of the world.
But last comment would be, my expectation there is I don't think it will form as quickly as what I've seen form in the past year with just the deployment of institutional capital into things like Bitcoin.
Mm-hmm. Okay, no, thanks for the insights. I think it's a kind of recurring topic. I think that's in a lot of people's minds. Thank you for taking the extra time with us, Brett. Do you have any final comments to kind of close off today? I know we have some other questions, but I think we're already 5 minutes over. We don't want to keep you too much, and I think we have a lot of other interesting discussions waiting. But would you like to give some final comments to everyone listening?
Sure. I mean, really, I would love to help raise the profile of selfishly of Coinbase and its institutional platform. So hopefully I've said a few things today which are of interest. I broadly view our position in the crypto economy as an enabler of institutional activity. And so I do think it's a precursor to be able to have comfort with, buy, sell, store, stake crypto to then participate more meaningfully in tokenization. So I'm a giant fan of tokenization. I think it's going to change the world. I love that I was invited to come to this. I hope that I can pair up with and help facilitate the growth of everyone that's participating in the panel today, and help sort of promote the growth of an adoption of tokenization.
Okay, well, thank you for attending. It was really great to have you here, and hopefully see you next time then.
All right.
Thank you.
Thanks a lot. Thanks, everyone.
Yeah.
Okay.